cryptocurrencies?
Well, we have been rating banks, insurance companies, stocks, ETFs, and virtually everything that investors or savers, depositors might be interested in since 1971. As we get to 2017, it looked to us like cryptocurrencies were going to really go through the roof, because we looked at the previous cycles and it looked like 2017 was going to be the big year.
Yeah.
At the same time, we saw that we looked around the crypto world and we couldn't find any viable research.
Mm-hmm.
All you could find on the internet and on the blogosphere was someone hyping up his own coin that he owned,
Right.
and bashing the coins of anyone else or coins that he didn't own.
Right.
So there was this feudal wars between the Ripple followers versus the Bitcoin maximalists, and then there were the altcoin fans, and it was brutal. That's the only information you could find on the internet or anywhere. Mm-hmm. No Wall Street research firm was looking at it seriously. Right. So if you're a serious investor, mm-hmm. and you're not just a millennial trying to throw a few bucks at this or that crypto, there was no place to go. Given that we had been on the cutting edge of many of the new developments and ratings, we were the first in many areas. We decided we'll be the first in crypto.
Excellent. That's great information. What are the different sectors of crypto that you're monitoring?
We're monitoring all the sectors, including with an important emphasis on decentralized finance. Because decentralized finance, of all the use cases, has the biggest opportunity for investors, both long and short term. And the reason for that is very simple. Decentralized finance has the potential to challenge or compete with, or even replace some share of the global financial system. We don't know if it's 1% or 10%. And we don't know how long it's going to take. But there's one thing we do know for sure, and that is the global financial system has approximately $400 trillion in assets.
That's a lot.
If decentralized finance can replace or compete with just 1% of the global financial system, which is very realistic, just a 1%, then that $100 billion is going to grow to $4 trillion. 1% of 400.
That's right. Yeah, that's a lot.
Right? So decentralized finance collectively, not one individual coin, one individual project, will have $4 trillion in assets. That's different from market cap. But it at least gives you a sense of how big it can be. And again, I'm going to make a kind of a false comparison, but just to give you a sense. That $4 trillion in assets compares to just over $1 trillion in market cap for Bitcoin today. Right? So that gives you just kind of a feel for the dimensions of it.
The scale of it.
If decentralized finance in the longer term can replace 10% or compete with 10% of the global financial system, now you're talking about $40 trillion in assets. And it looks like it's headed in that direction. It's growing very, very quickly. It's hard to say.
Wow. What are some of the driving forces behind the adoption of DeFi?
The one clear primary driving force is one 5-letter word. Yield. We currently there are currently about 3 or 4 billion people in the world that have a banking account or that have some access to banking through their apps, not in the crypto world, but in this traditional financial
centralized finance.
All of those people are being ripped off. All of us are being screwed by the financial system today because, hey, I have to put down $100,000 in a bank. I have to lock it up for 5 years. And they give me this thing called a jumbo certificate of deposit.
Right.
Right? A jumbo CD. If I do all of that, I put $100,000 down. I lock it up for 5 years. You know how much they pay me in interest?
How much?
They pay me the very best interest they can pay. It's the very best deal you can get.
Sounds exciting.
0.29%.
Ouch. And so, in the world of decentralized finance, there are better opportunities?
So compared to the 5-year CD, the rates you can get now in decentralized finance is close to about 20%. And that comes to about 67 or 70 times more than you can get on the 5-year jumbo CD.
Yeah, not quite 100, but wow, significant.
70 times more.
Wow.
You can also compare what you get in a decentralized finance to what you get in stock dividend yields.
Yeah.
The average stock dividend yield on the S&P 500 is about 1.3%, which comes with price risk because sure, the stock can go up, but if you're investing for yield, you want a stable investment.
Yeah.
And if the price of the stock goes down, your yield has been wiped out instantaneously in 1 day. Or in 2 days, so that your entire yield for the year has been wiped out, right?
Yeah.
In contrast, in the DeFi world, you can go on platforms that are quite reliable, get close to 20% interest by staking or providing liquidity with stable coins.
Right.
And so in stable coins, there's little or no price risk.
Yeah.
You're getting 20% yield, which is about 15 times more than you can get in stock dividends. And you don't have the downside risk if a crash in the stock or a crash in this case in the stable coin. So let's sum up the advantages. Number one, you don't have to plunk down $100,000 to qualify for a higher yield. You can invest as little or as much as you want. I wouldn't even use the word invest. I would say deposit.
Yeah.
Number two, you don't have to commit to a particular time period. You're not locking up your funds for 5 years and then suffering withdrawal penalties if you want to cut out early.
Yeah.
You can, keep the money there for a day. You can keep it for 10 days, for forever, whichever you prefer.
Wow.
Number three, you're getting much more yield. You're getting a fair yield.
Yeah.
And 20% is the yield you can get on a stable, reliable platform. If you want to reach out for something that's maybe less reliable, you can get even more yields. But let's stick to the more conservative side, 20%.
Yeah.
So that's currently 67 times more than the average 6-month CD in the United States. Which is about 0.19 or 0.17%. And last, and most important for anyone who is trying to build wealth rather than lose it, is that you don't have any, or you have virtually no price risk. Virtually no risk of a crash. You don't have the opportunity for a big profit, but that's not our goal in this particular case. Most people are not looking for a place to speculate. They're looking for a place to just earn a decent yield. Just be rewarded for their liquidity and the money they've saved. And the demand for that right now is the biggest it's ever been in the history of the world. Because there's a great concern about safety and what the future of the world might bring. And at the same time, the central banks of the world have artificially shoved interest rates to practically zero. So all other competing interest rates, be it stock dividend yields or junk bond yields, have all fallen in tandem. So nearly 4 billion people looking for more yield. That's a lot of people.
Yeah, it is.
Those huge advantages, 67 times better. You're going to see a massive tidal wave. You're going to see a tsunami of money flood from the traditional banking system and financial system into decentralized finance, and it has already begun. This is the first time in the history of mankind that we have the opportunity for a technology to reverse, to change, to make a U-turn in these massive megatrends and take us back to a time, or take us back into a world where we can have the benefits of all the things that we've done and all the technologies we've made, but also have a better balance between centralization and decentralization, and still be completely organized and peaceful and efficient. Right. That is absolutely mind-boggling. That a technology has emerged that can actually transform society in multiple dimensions in a way that has never been possible since the emergence of mankind.